Hey guys, Scott here with the free system building training. This is the second video, 3-part series. I'm so excited to tell you this today because this is the heart of system building. If there's one secret more than any other that's going to enable you to build superior systems and not average systems, this is it. So it goes like this. If you are building a trend following system and you get a period of trending behavior, your trend following system is going to do pretty good, probably. If you get a period of sideways markets, it's probably not going to do very good at all. Doesn't matter how good your system is. If you have a system that's optimized for low volatility sideways markets and you get a high volatility sideways market, your system's not going to do very well at all. So the absolute biggest thing that you can internalize about building a superior system is it's not about the pattern, it's not as much about the edge, it's not any of the things you think. What really is important is matching the market behavior that you're trying to isolate with the market type. So we have to figure out some way of matching up market type with our system. Now there's two ways to go about this. Way number one is we can invent some sort of market classification filter. And we talk about this a lot in the system building course, but there's plenty of stuff on market filters and market classification methods online. If you want to do a really deep dive, I've written some blog posts on it and whatever. But the simplest market classification measure might be two moving averages crossed over each other. And surprisingly enough, say an EMA 20 above an EMA 50, and you consider the market trending up, or vice versa, trending down. Now that's not a perfect classification, that's a classification with some lag and some problems, but it so happens that simple things often perform just as well as very advanced things, and in some cases even better. We've got two methods. We can choose a market classification method and say, the market's sideways when if this, and this, and the market's trending when this, and this. That's one method. The other method is that we can make it integral to our entry setups that they just don't happen in the wrong type of market behavior, which is generally a better, more elegant way to go about it with less complexity, and less complexity is less things to go wrong. So I hope you've all internalized the concept that the most important thing for the success of your system is matching your system edge to the market type. So your edge is more closely related to the market type than anything. The most obvious edges are things like reversals in trading ranges from the bottom or the top of the trading range, pullbacks in uptrends, which only happen in trending markets, or breakouts. Those are the most common types of edges there are. So their success is not really based all the time. Their success their success comes in a very short period. So if you're trading a mean reversion system, when the market's going sideways, you're going to be crushing it. You're going to get 80% accuracy, bang, 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 bang. The market will trend, and then you'll pace 4 or 5 losers in a row. That's the way it works. Okay, and vice versa with trending markets. So nowhere is this as important as in designing intraday day trading systems. Now, day trading systems are extremely difficult to build and keep running correctly because it's very difficult to match day-to-day market type. So there's some certain things you can consider. We go into it in a lot more detail in the system building course. But for example, if you wanted to trade only trending markets, if you're looking at, say, buying breakouts on very short period time charts, like 5-minute charts, or pullbacks and uptrends on very short period times, one idea would be to look at the first hour of trading or the first half an hour of trading and find the strongest markets there are that are liquid enough for you to trade, and trade only those, and vice versa. Other types of ideas you can build intraday systems around is the day following a trend day is a very high probability of being a choppy range trade mean reversion day. So you can build systems around specific types of days, and that's generally the way to go. For intraday systems, you're looking to isolate very specific market behavior. So as long as you can keep your system and the market behavior matched, you're going to do very well. So the next big decision you have to make is, do I choose a discretionary system or do I choose a manual system? Now there's pros and cons for both. And we talk about this a lot more in the system building course. Okay, so if you're going to use a discretionary system, essentially what you're looking for is some sort of pattern, some sort of technical analysis condition. You're going to test that very thoroughly with a scatter plot, and we show you how to do that on the list, and I've done some videos on it, and it's in the system building course. So you test it with a scatter plot to make sure it's an edge, and then your idea is you're going to watch a certain universe of markets, and you're going to take the patterns that appeal to you best on a subjective basis. Now, you're going to put as much structure around that as you can. Things like how many multiple trades can you take at a time, what universe of stocks or futures or currencies are you watching, how do you handle the exits. Most likely, the more discretion you have on the entry, the more mechanical you're going to be on the exits. There's a whole pile of structure to put around that simple thing. But obviously, building a discretionary system is a lot quicker than building a purely mechanical system. Now, why? Because first of all, you can't backtest. Because if you're picking and choosing the perfect example of this and then the perfect example of that, you can't backtest because your memory is faulty, it's retarded. So the only thing you can do is forward test. So what you do is you paper trade, and every time you see an entry that you would have taken, you get out your spreadsheet and you start marking your scatter plot. Period 1, period 2, period 3, and then you develop a scatter plot and look to find a positive correlation to make certain that you've got an edge and you're not just fooling yourself. That's a discretionary system. Now, there's pros and cons. The pros, that's really quick to hack up, really quick to have something working that you can play around with. The downside is you can't backtest, so a lot depends on you. So you are the edge to a large degree. If you start having problems in your life, if you start having marriage breakups or get sick or whatever, your mental performance will go down. Or if you go and draw down, your mental performance will go down, and then your results going forward won't represent the past. So discretionary systems trading psychology is a lot more critical. You can't backtest, and the other downside is you're going to have to practice this for at least 3 months, and then slowly work up the size. If you just build your system and then go to trade it for real money, trading $5,000 each trade, risking winning or losing, you're going to make so many mistakes. You're going to put yourself under pressure. It's just not going to work for you. So you have to choose between, do I want to do a discretionary system like that where my results are highly uncertain? Now, these type of systems, if you get yourself dialed in, if you're in a good place in life, if you're loving life, if you're grateful for the opportunity to trade, you can do really well with these systems. If you stay on point. Now, if you have a small account and you're looking to compound it to a big account, honestly, these are probably the way to go. If you're trading cryptocurrencies, which have problems for mechanical systems, which again we address in the system building course, the specific properties of cryptos, but cryptos have problems for pure mechanical systems, namely because they're also so tightly correlated. So one goes up, they all go up, one goes down, they all go down. So you can kind of fool yourself by taking a lot of trades thinking that you've got a strong edge, but it's not, it's just the market type. So an example of that is earlier in January, I did 38 winning trades in a row in cryptocurrencies, and then 10 losing trades in a row, because that's how it works. You with me? Okay, that's one end, discretionary systems. So at the other end of things is mechanical systems. And in my opinion, mechanical systems are the best way to go for beginner traders. Why? Because when you build a mechanical system, you can backtest it for a long time. And you know exactly how much money you would have made for the last 10 years, the last 20 years, the last whatever. You get a very good idea of what market types it works in and what market types it doesn't work in. You get to do a complete backtest so you can see how would it have behaved on some of those very bad days. How would it have behaved in the great financial crisis? How would it have behaved in the tech wreck? How would it have behaved on Brexit Day or on the day Trump got elected? You want to stress test your systems to know exactly what's the whole purpose of backtesting and stress testing is not just to find out what's an edge, it's to find out what's my worst case scenario. Like, you know, that's what we all want to know is how big are the drawdowns going to be? What are my 1 day worst case scenarios looking like? Can I plan ahead for this? Is this still within the acceptable bounds of my goals? Okay, so how do we build a mechanical system? A mechanical system's harder to build than a discretionary system. It's got more moving parts. The performance will be more consistent than a discretionary system, nearly always, but it won't have the high-end performance. Nothing will do as well as a discretionary system trader who's running through a super performance period. It's quite frankly amazing how well you can do when your system matches up with the market type and when you're performing okay together. All three things working together, you can do amazing things. Now, mechanical systems don't have that, but what they do have is consistency. Mechanical systems are the systems that you want to be looking at if you're doing retirement accounts, things that you want to chug along for 10, 20, 30 years. Mechanical systems are what you want to look at if you're not just trying to roll the dice and make a few bucks. If you're trying to build yourself a sustainable trading business, mechanical systems are where it's at. So what do? The only place that we can start is with testing our entry condition to see if it's an edge. Now, like a scientist, we don't want to do a back test right at the start, because then we're testing a whole pile of different things together. We're testing where is our stop loss, we're testing what is our target, how do we trail a stop, when do we move it to break even, all that stuff. We don't want to test that. Right now, the first thing you want to do is, I've done some videos on scatter plots, I talk about it a lot in the system building course, but it's really simple stuff. You're writing down the rules of your entry condition. Now, you've got to have an edge, you've got to have an entry condition. That entry condition could be as stupid as, I think there's an edge in the last 15 minutes of trade every day. I think there's a bullish bias, which actually there is. So you might test what happens if you buy the market 15 minutes before close and sell it 5 minutes before close. That would be a perfectly acceptable thing to test, a time of day edge. There's also end of month edges, things like that. They're not all dependent on technical analysis. Some are. You could make a perfectly acceptable system trying to isolate trending behavior, looking for a hammer candle in an uptrend with a pullback that's hit a certain moving average. So what you do, it's always the same. You wait for your preconditions to happen. So it's always the same. You wait for your technical preconditions to happen, and then you fill out a spreadsheet. In that spreadsheet, you put where are you at, where is the trade in profit at the point of entry. It's at 0, after 1 bar, after 2 bars, after 3 bars, after 4 bars, and you keep going up until about the average length of trade. So for pattern-based systems, a nice judge is about 4 bars. Is about the right one. For trend following systems, which might hold a trade for 3 or 6 months, you need to go further out into the distance. And we collect a lot of data. We talk a lot about backtesting in the system building course and in and out of sample data and things like that, but it's a bit too complicated to get into here. But essentially what you're trying to do is build a scatter plot of what happens in the market after your entry condition. And then you're going to plot using Excel or Google spreadsheets a regression line of best fit. And we'll dump into a screen capture video now, and I'll show you exactly how it's done. But you're looking for positive correlation. Okay, the next thing that we've got to do, now that we've proven we have an edge, if you haven't got an edge, or if it's marginal, or if you think it's or if you're not sure, you need to stop, reset, and find something that is an edge. Because the number one cause of problems at this stage is people who've decided that something's an edge and they're not willing to question their own judgment. So you have to be actively trying to disprove your own hypothesis at this point, just like a scientist. So that's really important. So you have to actively be trying to disprove your own hypothesis at this point, just like a scientist. So think about that. So you're trying to take, let's say my hypothesis is pullbacks in an uptrend with a certain price pattern under a certain moving average are an edge. I don't want to prove that that's an edge. I want to try and prove that it's not an edge and be pleasantly surprised that it is an edge. So where are we now, like in the overall system building process? So where are we is we've decided on some system goals that are realistic. We've decided on a type of system after looking at all the different types of systems that we could build that suits our goals, our financial goals. Okay, after that, we've decided, do I want to do a discretionary system, which is easier to build but much more difficult to execute, or do I want to do a mechanical system that's more difficult to build and easier to execute? And there's pros and cons for both, and you don't have to be all the way. You can be a mechanical system with the freedom to skip a trade here and there, or you can be a discretionary system with almost everything mechanical along the way. Now you've decided between a mechanical or discretionary system. So after that, you've tested your entry condition to check that it's an edge. Now at this point, we're getting pretty close. You know, we've got an entry condition that closely matches market type, and we're certain it's an edge. And all we have to do to flesh out our system is the structure that goes around that. And the structure that goes around that we talk about a lot more in the system building course. It takes me hours and hours to go through it. It's not that I'm like intentionally holding it back or being that upsell guy. It's just that, you know, I talk for about 12 hours about it in the system building course. I just can't do it again. But anyway, if you have questions, I'm not trying to make you pay for a product or anything. Seriously, if you have questions, you get this far on your own, you don't have to pay. Just send me an email, scott@scottphillipstrading.com. I answer everyone's question. I help everyone. There's like, you know, if you want to buy my course, buy it. If you don't want to buy my course, don't. Doesn't make any difference. It's not a big, it doesn't make any difference to me. I'll still help you anyway. It's like that, okay? So what's the next point is we've got to craft an exit algorithm that optimizes the system. Now, we're going to talk about that in the next video, and we're going to talk about the rest of the structure that you need to put around your system to make it a working thing. I hope you've enjoyed this video, and I can't wait to show you the next one. Okay, thanks guys.